So Monday we got U.S. S&P Services PMI. Right, we got PMI tomorrow. Retail sales Tuesday. Industrial production. Housing starts numbers. Crude oil inventories. FOMC statement. Right, there's the rate decision for Wednesday. It's gonna. I think for Wednesday, that FOMC rate it's gonna set the tone for the rest of the year. Like two weeks left, right? Like two, maybe like 10, 15, 14 trading days left. But I think that FOMC rate decision, I think that's gonna put us either to continue the Santa rally or to give the Santa rally back and possibly take a little bit more from NQ before we close out the year and start trading 2025. Then Thursday we have jobless claims, right? Home sales. Friday we got PCE, core PCE. There's quite a few orange folders, but as an ICT trader, right, we look out for the red ones. So if you guys remember the last time we spoke, and the time before that, what I like to see market structure do when there's news, right? We're gonna say this is 1 week of price action, right? And we're going to say we had an uptrend of a 300 point run for the week, right? 300 points is what we did in a week. Well, what I like to see news do is, we're going to say that this is only Monday and Tuesday now. So previously, what we said was this was a week of no news, right? We had a 300 point run. We gave some, took it back, gave it, took it back, right? We ended up closing the week 300 points. Maybe one day we traded in a channel, the next day we dropped, came back up here, right? That was a whole week of trading. While with news, this could only be Monday and Tuesday's price action, right? The 300 point run. Because what I like to believe is what ICT explains, which is the news, and we're just going to say this big run up is the news candle, that the news is going to speed up price and it's actually going to cause whatever weekly target we had in mind for our weekly bias. It's just going to run to hit that target sooner because news, like I said, I like to believe that news just makes a run on stops and then goes the opposite way, but it provides um, quick market structure, right? Just going to give us that big nice run or that big nice drop that we were anticipating the whole week to do, but it only took actually a day or two. So let's go over just a little bit about what happened on Friday, because always, always, always you want to look at previous price action to try to get a handle on future price, right? We read the old data to try to predict the probabilities of the new data. I think there was already a message, so let me see. So just talking about the news. Okay, so like I explained, right, we want to see what happened on Friday. I like to go from the daily or the weekly, right, just to kind of see what I got going on in terms of the highest time frame that I go to look at market structure. We all already know that we're in a crazy ass uptrend. We've been in a crazy uptrend forever, right? Which is good, not a bad thing. But there are pullbacks, right? And when we have these pullbacks, there are opportunities for short. Even though we are on a bull run, you can still short the market. It's just going to be your stop losses might have to be a little tighter, or you might have to look for that A plus setup only. Right now, what is working is looking for longs, right? Specific triggers to go long, and to hold because we are in a crazy bullish market. Every pullback is, I'm sure you guys have heard by the dip, right? Every pullback is an opportunity to go longer. When are we gonna top out? I mean, I guess nobody really knows, right? Because we topped out here. All of these we were topping out. Is it possible for us to dump next week? Yes, but we want to look at it day by day. Or day traders, right? Intraday traders, we want to see what happens. What we think is going to happen only tomorrow. Maybe have a weekly objective, but it's going to be ever changing since we have so much news. and the news can cause us to reevaluate our analysis because although we're bullish, we can see a market structure shift on the smaller time frame, which turns into higher time frame, and the market could reverse, right? So it's really good to do a daily bias every day to build your narrative. So just looking at some key points for the daily, we can see that we broke all-time high. We all saw this, right? Thursday we broke all-time high. Friday, sorry. Wednesday we created it. Friday we broke it. And then today, right, where we opened slightly where we closed, and we're continuing to go up higher. So one thing that's I like to map out, and we all know this already, is my daily high and my daily low, and my daily equilibrium, right, my 50%. So now this isn't exact 50%. Remember I talked about this last time. I just eyeballed it. You can totally go in, right? Sorry, you can totally go in and do it by the button. Totally fine, right? I like to I'm a big fan of reading candlesticks, right? So I've done this for some time. But for you guys that are just starting, you can totally just, that's a default. You guys can totally just leave it as is, right? There's no reason to map it out like I do. You can have it be precise. So this would be your daily high, your daily low, and your daily EQ, right? This black box. And all I did was map the high, the low, and the middle. So let's go down to the 4 hour, because that was the one day. We'll go to the 4 hour and we'll look at what is holding price up, because what hold what is holding price up is what is going to cause it to fail. So if we keep bouncing off of, and this is just an example, if we keep bouncing off a 15-minute fair value gap, and we notice that that fair value gap is super strong, we're going to keep bouncing off of it, and then we're going to launch off it, right? Like right here, we have a perfect example. We got the 4 hour, we have this nice big fair value gap, right? We failed to close underneath and continue on the 4 hour. So we know that this is a point of interest, right? Not a point of interest as a low or a high, but a point of interest as in this area is holding price and keeping it bullish, right? This little area is keeping it bullish. Um, Regardless of what's happening down here or up here, we are at all-time high, so there's no data back here, but regardless of what's happening down here, we are being propped up by this fair value gap. So what, like I was saying, so what holds us up is going to be our target to cause us to fail. So this big fair value gap right here, this 4 hour, I like to, use this imbalance as my trigger to go short. This is how I find different ways to find triggers to go long or to go short, right? A lot of people that trade breakouts, or they trade supply and demand, right? If I break this demand, I'm going to go to the next demand. If I break this supply, it's possible to go to the next supply. Well, I like to see, and I didn't go over this last time, I like to see what keeps us propped up, because that's what's going to be our downfall to go lower. So here we can see that we have the top of our fair value gap that's been keeping us up. We have the bottom of our fair value gap, right? And I am not going to worry about OTE on this big fair value gap, because when we come in to fill an imbalance off of a market structure shift, your target should always be the top, right? Like if we market structure shift right now we shift. My first target is going to be the top, and then my second target is going to be the bottom. Because a lot of times when we fill an imbalance, what we do is, even if we're continuing price on bullish structure, we'll drop down to fill the imbalance, maybe wick out, maybe we'll wick onto the underneath of the imbalance, and then we'll still use that structure or whatever it was that is keeping us bullish. We'll use that to prop us higher. What we'll do is we'll create that again, that like I explained, that false sense of direction that we're going lower. We'll take out a big inefficiency, right? Maybe we'll turn a supply into demand, or demand to supply, or a resistance into support or vice versa. But what I'm looking at is I'm looking at this 4 hour as a trigger to go short. So I got my daily, right? My daily high, my daily low, my EQ. Um, and look where the daily low is set, right? My daily low is set right on top of that 4 hours. So we dropped into the four, came back up, dropped into the four again, and now we're still coming back up. So it's super possible, right? To come back down and drop into the four again and go higher, or drop into the four and go lower here, or drop into the four and continue lower for the rest of the year. That's why I think FOMC is very important, because I think that's going to show us the rest of the trend for the last couple weeks of the year. So this 4 hour is going to be super important to me. All of this imbalance down here is cool, right? It's keeping us propped up, but none of it is as important as this 4 hour here. So I'll have this 4 hour mapped out, and then again, high, equilibrium, low. So now we'll go to the 1 hour to see what is going on, right? During Friday, Asia did a nice little consolidation, right? We created one high and one low on the 1 hour. We broke the high and we kept going. Remember, you always want to keep that probability of us taking the high and not reversing, but taking the high and continuing higher, which is what we did here when we took Asia. But after we took New York, that's where the setup shows itself again, right? Which is what? When we take a high, we reverse back into the range, and then we trade inside of the range of that PD array, right? So we're looking at this PD array here, this big PD array, right? When we drop back into it, into the array, right? We never actually filled everything. Why? Because of that 4 hour for value gap. So price, right? This is where I want to form on the 1 hour if I want to go short or if I want to go higher. So remember what I explained last time. When we like to accumulate above equilibrium, what do I look for? I look for a shot higher and then a drop. So based off of what I've traded before and what I've seen, that's exactly what I'm looking for here. We have dropped, right? We created the low a day, the high a day on Friday. When we opened and we played around on equilibrium, and now we're trading on top of it. So I would love to see us take out Asia high or take out this high here, right? Which is what? A big giant order block. Tap into that higher time frame PD array and then drop lower to previous day low. So for tomorrow, that is my sentiment, right? That's what I think is going to happen. I think we're going to prop up during London, and then London is going to provide that Judas swing, which is going to ultimately drop us all the way down. Not like down here all the way, but like down to previous day low. See if you guys have any questions. It's pretty straightforward. I'm not accounting for any news, like any news. Oops. I'm not accounting for any news. I'm only accounting for structure, right? Because news isn't going to happen until tomorrow. So for us to continue higher overnight, for me, makes sense, right? We're going to have that short term draw on liquidity is going to be up here. Our short term draw on liquidity is up here. And then once news starts, it's going to amplify that price movement. And we can possibly see us attempt to take out another high but fail at the equilibrium and then drop lower. So I would like for price to come up, fail to take all-time high, and then drop beneath equilibrium, which is back into the range of Asia. Take Asia low out, which is equilibrium, right? Drop underneath equilibrium, and then come back to low of day. So tomorrow, I'm looking for a reversal at the high of Asia. Not like Friday, where we took Asia out and we went higher and we took out 2 days ago high, then reverse. I'm looking for us to fail fail to take all-time high. Take out Asia high, fail, which we will then drop into Asia's range. Take Asia low out, use Asia low as a crutch to continue lower and continue that shift in structure like we did here, right? We came up, took the high. This one we did take all-time high, excuse me, and we dropped lower. That's what I would like to see here. I want to see us, sorry, it's actually way over here. What I want to see us do with today. Now with news, right? We're going to do a trigger for longs in case longs do happen, right? What are we going to look for to keep price bullish here? So we always look for what? We look for that 3 drive where we create equal highs, right? And then we take it out and then we drop back into the range. But in order for that to happen, when we create a key level, we have to create a fair value gap on that key level, use it, the fair value gap, as support to go higher, where we create what? Another fair value gap and go higher and higher and higher. We create all these imbalances and the equal highs to take out and turtle soup and go lower. Which, if we look at current market structure, on the 5-minute, sorry, we can see here where we created some equal highs here on the lower time frame, right? Equal highs here on the lower time frame, equal high here on the lower time frame. And when I'm looking at the equal highs, guys, I'm just looking at the bodies. Like, yeah, I get a wick, and then I get another wick, and another wick, and another wick, and another wick. But the bodies, right? Remember, the bodies tell the story. The bodies are failing to go higher. This is letting me know that price is giving me a hint that it's rejecting, right? It's rejecting that high. So we created equal high here, here, here. We took the high out. We created a fair value gap. When we took it out, traded back into the range and we dropped. We didn't come down to take out the sell side, but we still did the 3 drive, right? We still created that. So right now what I want to see is the same thing. Same thing that happened here is what I want to see here. As we create, let me erase this real quick. As we create new highs right now, like this is a high right here. As we create new highs, right, what do we have here? We have equal highs, right? Remember the body. We have equal highs at the body. We also have some buy side here, right? Some minor buy side. We also have major buy side, which is way up here, right? So coming up from a higher time frame structure, right? This is actually a relative equal high here. Even though it's at a slant like that, it's still a relative equal high. When we take Asia high right now, I want to see a fair value gap take the high, right? We all know what a fair value gap is. If not, we can go over that. And I want to monitor that fair value gap. If we trade under the fair value gap, that's good for me to go short. If we trade into the fair value gap, just like we did on the 4-hour that I was showing you, and we wick out of it real quick, that's a good signal for continuation, and we can use that fair value gap the way it's intended to go higher. So you got your 2 different options, but your options only come into play when we take the high out, right? I want to see a displacement or a fair value gap take out Asia high. Then we need to use that to go higher, or we need to trade under it to go back into the range, to trade lower to hit Asia low, and then like I explained, drop lower to hit EQ, and then drop lower. And that'll create the structure, right? Let's erase all the red real quick, and then we can do the market structure one more time. That'll create that turtle soup structure, right? Where we have a high here, right? The fair value gap is going to what? Take out the high. we'll trade into the fair value gap, and then we'll continue lower. Right, here's your high, equal highs. Here's your turtle soup. And then remember, we're banking on failing to take all-time high. So this is what I would like to see happen tonight during London with NQ. We created a high here, drop, take out external liquidity, right? In the form of Asia high, take it out, drop back into the range. This fair value gap is what's going to provide our entry, the fair value gap at the high, to go lower, or we negate turtle soup and we go higher. I'm banking on turtle soup, Asia takes out, or London takes out Asia high, and then drops us back into Asia underneath our PD array of our previous day's range, and then drops us all the way down lower. That's what I would love to see. Do you guys have any questions? Do you want to see us go lower to 650? George, Diamond Hands? Let's see. 650 would do what? It would fill the rest of that regular gap people have on. Right? 650 would be like down here. So I'm looking for previous day low, 670. So you're 20 lower than me. So it's possible, right? What do you want to see there? You want to see us continue or you want to see us reverse? Crazy, bro. You crazy. So yeah, that's what I want to see happen overnight, right? I want overnight to take Asia out, provide that Judas or the turtle soup to drop us into the range, and then to go lower. Now again, right? You a lot of times when you see or when I used to see people create a daily bias, they would just have I want to see price do this and go up here, right? They don't have a I don't want to say contingency, which is not a good or a bad thing to have when you're starting out, but when you get more experience and you can spot that your daily bias is getting invalidated, you want to also be able to, and this is me, right? You want to also be able to trade the invalidation of your bias, right? So what would be my trigger to go long, right? My trigger to go long would be if we create that fair value gap that I showed you, right? The fair value gap at the high, and we use the other crutch to go higher. Failing to drop back underneath equilibrium is the invalidation of my bias, right? Then the structure that I've created to go low is invalidated, but instead, what we need to look for is what? Structure of purging equilibrium to go higher, right? So we're going to purge stops and then we're going to go higher. We're going to purge stops, right? And we're going to go higher. But the invalidation of my trade is taking Asia high out and continuing higher. Then I will look for either a long play in here or I will do what I always do and I'll wait for New York to be taken out because we can still validate my trade, right? Because remember, I want to see us fail to take New York, fail to take London. I want to see this not work. So it's still possible for us to create the fair value gap and keep creating highs, but fail to take all time and drop like I wanted, right? We can still fail during equity open, creating what? Our 3 drive, taking us out, dropping back into the range, and then continue our structure lower. So my invalidation point is twofold, right? I have a short-term invalidation and a long-term invalidation. The bias I have is take the high out, drop lower. That's what I want to see. That's what my narrative. My narrative is take out Asia, drop down to previous day low. If we take out Asia and continue higher, right, I have another invalidation here, which is where we do the same thing. We create the fair value gap on the key level. we use the fair value gap to go higher, or we trade under and use the fair value gap to go lower, where I will target equilibrium of the previous day range as a TP, and I will target the lower day as another TP. So it's possible, right, for my narrative to be invalidated, but I still have a general idea of what I want to happen, which is still fail to take and drop lower, which is still what? It's still, oops, it's still turtle soup. But we just continued higher than I wanted. And then Diamond Hands wants to see us go all the way back to zero. Diamond wants us to hit 20,000. 1,700 point drop. Yeah, Guam. So remember the sessions overlap each other. So you have where New York ends, then you have where Asia opens, London opens, and Asia closes, right? This is a close and this is a open. Open, close, right? This is Asia, this is London. So you have, and then you also have where New York, right? This is London. You also have where New York opens and closes. But there's always a little spot where the session is by itself. So you have Asia open, which is by itself. Then you got Asia London, where they commingle. Then you got London by itself. Then you got London New York, where they commingle. Then you got New York by itself. So if you erase all our drawings, you can see what I mean here. You got Asia, then here's London, right? And then London starts. Here's New York, and then London ends, right? Here's London. London ends here, and then this is all New York by itself. So the sessions are by itself, and then there's two sessions, and then by itself, and then two sessions, and then by itself. So I'm looking for, and I can show you an example, right? I'm looking for something like this, which is what I showed earlier, right? So if we go to bar replay, right, this is where London opens here, right? This is our Asia high when London opens, right? Asia, and then there's London, right? What did London do? Literally by like one tick when London opened, right? We took Asia high. Here's our fair value gap. When we did what? This was our Asia high right here, right? Created a fair value gap. Then we traded under the range, which was our trigger to go short to attack Asia low, then equilibrium of the range, and then New York low. Right? That's where the fair value gap we traded underneath came down, hit Asia low, came back up for New York, dropped lower to equilibrium, dropped lower to previous day low before continuing higher, dropping lower. So what happened here is what I want to see happen here. Go back real quick. Turtle Soup is just a false breakout. Yeah, it's a fake breakout. So yeah. Now there is one more thing that I wanted to go over. If you guys did see the Asia framework, right? At how I see the market reacting to Asia, right? The market reacts according to what I've seen. It reacts to Asia four different ways. One thing that I wanted to add is when we fail to take out an overnight low, price will remain bullish until equity open. And then equity open, you want to be careful because we can come back to attack those lows. So that's what we did on Friday. So if we go back to the bar replay, right, and we come back to here, overnight, we never took out the important low, right? Here's Asia low, never took it out. Here's NYO, we never took it out. Here's London, we never took it out. Then when we created New York, right? New York kept running up. So then when we dropped, we used Asia as a crutch to go higher, right? We'll go back here. So failing to take out the overnight lows always leads me to believe that we're going to have a bullish equity open. Failure to take the highs, right, leads me to believe that equity open is going to give us a bearish reaction. We might run up, but it'll still give us that bearish reaction, right? Equity, our Asia high, London high failed, New York high failed to take London, right? So when equity open happens, this is news. This is equity open right here. Let me see, 9:30 is equity open. What did we do at equity open? We dropped. This is equity open right here. It was a nasty, ugly choppiness, but we did drop, right? Let's look at another example. Look at here. This one had news, but here's our Asia low, London low, and then we failed to take those two, which leads me to believe what? That our equity open, which is right here, is going to be bullish. Here we took out the overnight high, and we also took out the overnight low by like one tick. All right, let me erase all this real quick. Here, right? This is the overnight low that was set in before Asia even opened. When we came up, right, here's Asia low. We took it by a tick, but we failed to take this low here, right? It wasn't a three sequence, it was only two. So this one would have been a tricky equity. So what I want to see is, I want to see us fail to take Asia, fail to take New York, and then that lets me believe that equities is going to have a bullish run up. And the same thing, like I said, for the opposite, right? For the inverse reaction. We fail to take Asia high. London fails to take Asia. New York fails to take London, which leads me to believe that the reaction for equity open is going to be bearish. So if we do that here, right? If we drop low and then we go lower and this is Asia high and we fail to take it and then we fail to take London, then guess what? When equity opens happens, I'm going to stick to what I've seen and I'm going to look for a reaction to go short, right? Run above stops to go lower to attack that low a day that we were talking about yesterday. And I've seen that happen a lot of times, right? We just went over the last couple of days and we've seen it. And whenever like I said, whenever I see that, it leads me to believe that at the open of equity, we're going to continue that structure. Just looking to see if there's any questions. Cool. If you guys do not have any questions, I just wanted to add that little um, session structure that I've noticed. You guys can check it out. Don't try it tomorrow, but you guys can check it out and see if that's something you like. If you want to add to how you trade, it's just a nice little piece of eye candy to help you confirm um, a directional bias, right? Not a daily bias or a narrative, but just kind of like, oh yeah, this specific failure to take the highs overnight, it's an indication of shorts at equity open, and vice versa. Yeah, but you wanna, Guillermo, you just want to remember you have to take London fails to take Asia, and then New York fails to take London, right? So equity open can still make a run for that high. So let's say this is Asia, this is London, and then New York opens down here, and we'll say it's a 100-point run. Equity open can still run up to attempt to take out these highs, right? And when we fail, if we fail to take it out, that's your indication to go short, right? Because that's your structure to go lower. So you want to see Asia rest by itself, London rest by itself, and then when New York opens, right, when we have equity open, we're going to create the Judas up and as the fake move, right? The Judas is the fake move. We're going to create the fake move up and continue lower, or we're going to just continuously drop. So you just got to monitor what's going on. But failure to take Asia, failure to take London, for me is a nice indication that we're going to continue lower. And then vice versa, right? You have Asia here, London here. If we fail to take, we're going to continue that structure higher. Because remember, this is external liquidity. If we're not taking external liquidity overnight, it means we have enough to go higher. If we're not taking external liquidity on the highs overnight, to me, it means that we have enough liquidity to go lower. It means that we're going to continue that structure because we don't need to take any externals out to go lower. We've taken out enough external liquidity to start a reversal on the order flow. So if we look, right, if we look at here where we did fail to take the highs, right? We had enough liquidity to continue lower here, but we were just generating more liquidity to run up to take all-time high. So failure to take the highs, right? It's market structure, right? If we're continuing higher and we fail to take it, it's a market structure shift, right? If we fail to take the low, we go higher. If we fail to take the high, we go lower. We just have enough liquidity, right? We need to create it's called a low resistance liquidity run. We need to generate liquidity. Everyone who thinks we're going to go long is going to go long here to get stopped out when we reverse sharply. Everyone that goes short here is going to get stopped out when we reverse to go long, right? We're going to take the low out and then we're going to shift the structure, shift the structure, shift the structure. But like I explained to you guys on the higher time frame, that's just this. The lower time frame, it's a bunch of structural breaks, right? But on the higher time frame, it's a literal giant uptrend. So when we do that, when we fail, right, we want to look to our higher time frame market structure and see where our last high was, right? There's our last high, and if we're going to come back to that high, right, we go higher. So failing to take, we generated enough liquidity on this run up to go higher. When we did fall, where do we fall to, right? Equilibrium of this range. Let me erase all my cool drawings. Equilibrium of this range, which was also the high of this, right? When we just created that market structure shift where we went from up to down to up to down, right? Up, down, up. And then now I want to see us go down to low. Diamond Hands wants a little bit lower than previous day low, so it is possible to tap this, but it would just fall in line with what we've been looking at since last week, which is just bullish market structure. Cool. If you guys haven't seen that cool Asia video where I explain the different frameworks, right? What happens after Asia is set? It's a pretty cool video. Um, it helps a lot of people with creating a bias and a narrative, which is ultimately what we want, right? We want to create a a narrative that's gonna let me know to short here, right? And the reason why we want to short here is because of our bias, right? We want to see us drop down to previous day low. This is just an example. We want to see us drop down, take out previous day low. We want our stop loss to be this low because we believe that, sorry, it's the wrong way. Because we believe that We're going to take this low out, but not that low down there, right? So this would be our trade idea. But we're not going to get there until news, right? So let's say news is here, 10:45, or we're going to go to 8:30, right? So at 8:30 is where I want to look for this setup. I don't care what happens before 8:30 or after 8:30. I care what happens at news, because what I think is news is going to drop us to take this low out, fail to take this low out, and drive price to all-time high. We're going to say that's our narrative. So then we sit and we wait for our trade to play out, and because we already have our idea. What happens is we try to take a bunch of trades in between, and we end up losing, or we end up, giving back. If we did take a play at night, we end up giving it back because we try to get more. But when ultimately this was our play, and if we didn't take anything except for our one trade, guess what? It would have tapped this in, and then it would have went all the way back to our TP. We would have made way more than if we traded any of these if we just waited for our one trade, which is like the trade I was talking with Seb about for oil. So if I switch the screens real quick, we go to little critique one. Let's see if I can find it right here. I'm gonna go to oil, right? These are the two ideas that I had for oil. One of them was a long. If we drop down to 70.93, take a long to 71.99, stop at 770. And my short setup was going to be come back up to 71.27. If you guys have seen my standard deviation video, it's the zero, the low risk buy sell zone. And my stop loss was going to be 71.42. So if we go to oil, and let me switch my screen again, it did what we wanted, right? We wanted it to go up there. It would have stopped us out though. Like if we look, right, and oil's still downtrending, this was our stop. Our stop was here, 71.42. Where did we get where did we get stopped out at? 71.44. 0.02 points took us out, and then did exactly what we wanted. So it's going to happen, right? You're going to get stopped out of your trade, and and it's going to run with you. That's okay, but my idea of my trade was really good, right? Because I formed a narrative based off of what I seen or based off of what was happening, and I waited for my trade to play out. Did I lose? Yes, but I stuck to my convictions, right? I did what I thought was going to happen, and it did. It just took me out by 0.02 ticks. Fucking took me out. So before price, right, like the photo we saw, before price even got there, I already had an idea of what I wanted to see happen. So when it did it, I wasn't there second guessing myself and de-risking by selling a couple cons, right? I saw what I wanted to happen, and it did happen, just not to my liking. It got stopped out by 0.02, right? Which is, I think, the lowest I've ever been stopped out by. Like, to be honest, like, new record. I got stopped at 0.02 ticks. Or points, or whatever you want to call it, pips or pipettes, whatever. But the trade idea was right. I wanted to see price where we were at. I wanted to see price come up, tap me in, and drop lower. Price went up and tapped me in, all right, and then it stopped me out, and it went lower. And then the long play, right? I'm going to go to the long play. I'm not going to switch screens. But the long play was entry at 70.93, stop loss at 770. So since my long play played out, I'm no longer interested in the short. But let's see how the short played out. It was 70.93 was the entry. So if we go back and we look at 70.93, right, our entry for long would have been down here, and our stop loss would have been 770, which was actually pretty tight. So 770 hasn't hit yet, actually. 770 is down here. So our long play, we would be triggered in right now, and we want to see what we want to see us come up higher. Why do I want to see us hit 770 as my stop loss because 770 is equilibrium of New York's range. It's not equilibrium of the whole range, right? This would be the whole range equilibrium or middle point or 50%, right? That would be the whole range. But if we come back to just New York's range, right? My entry is slightly above, stop loss is slightly below to take us higher to do what? To continue that bullish structure. But the play, I already had the play in my head when price was back here. What do I want to see price do when it gets to this low? I want to see it reject this when it gets to the midpoint. Sorry, not the low, the midpoint. What do I want to see when it hits the midpoint? I want to see us hit the midpoint and shoot up, which is not what we're doing now. We have hit the midpoint, but we're not shooting up. But look at what happened when we tapped the midpoint. Right? We came down, we traded on the midpoint, and then we took back some of this. Right? Here's NYO. We took back some of this. We created a very small market structure shift here. So it is possible for this play to play out because we've created the displacement and the bounce that we need on our key level. But like I said, I had an idea of what I wanted to happen. I want to see a short here, and I want to see a long here. I want to see a long here, 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 right? I just want to see a long hit this price, but I want to have a narrative behind it. Why are we going to hit this and go higher? Why are we going to hit this and go lower? Why is price going to accumulate, right? We just want to try to find the probability. So we can, hopefully this play plays out to the long point, and that would be actually really good because then you could have caught it both ways. Well, we got stopped out here, but we could have caught it one way. Do you guys have any questions? No questions? I'm gonna go back to sleep. Today was a day. My kids were being crazy. I'm gonna pause the video.